this expectation of an expansionary policy response from the central banks is driving this, right?
I think so, but I think it's also a little premature. I mean, I think what we're finding right now, especially when you look at yesterday's numbers, for example, is that people are finding it very difficult to explain why the reaction to these numbers are positive. I think the only explanation really is this additional stimulus from the ECB. But like I say, I think it's very premature because it was only a few months ago that the ECB announced its package of stimulus measures, quite a large package as well when you take into consideration this is the ECB. They don't really like to commit to too much too soon. But I think people are just maybe getting a little bit carried away. I don't expect quantitative easing, for example, this year at all. I think at the very earliest it's going to be the first quarter of next year, if we see it at all. The ECB's been very reluctant in the past to commit to quantitative easing, so I don't see that changing going forward, especially not at this stage. So I find the reaction a little bit strange, if I'm honest.
So where'd you put your cash then?
Well, this is the thing. If you take a look at where the cash is going right now, it's going back into things like into safe haven assets. So you're looking at things like US Treasuries with the yields now falling to one-year lows. But we're also seeing what we're seeing a lot of at the moment is fund managers actually keeping a lot of cash on the side, which is a very worrying sign because aside from looking at those safe haven assets, when you start seeing money being kept to the side, that is a sign that people are no longer confident in the market.
We got the first revision, or second reading of the UK GDP number today. I think 0.8% growth expected. Is that what you're going for? And again, what difference is it going to make if that comes in lower than expected?
Well, that is what we're expecting, and to be honest, this is quite consistent now. This is 4 or 5 quarters in a row where we've seen 0.7%, 0.8% growth, which is a very good sign for the UK, especially when, like you say, we're looking yesterday at these GDP numbers for the Eurozone, very disappointing. We're looking at the US growth for this year, it's pretty much flatlined on the year, and then you're looking at the UK, which is averaging around 3% annualised growth, 0.8% on the quarter. So I think people are looking at the UK like the real success story, and because of that, if we do see a slight miss of expectations, say it comes in at 0.7, 0.6, I don't think people are going to be too bothered because it's still well ahead of the rest.